So we go to Abhishek's question, who has recently invested in small and mid-cap funds, asking how long will he have to wait to see decent returns for both SIP and lump sum investments that he has done. कब मिलेगा पैसा?
Yeah, in fact, this is where you need to really work hard in terms of managing your mind, because you saw the past numbers, you saw the past SIP numbers, and you saw the phenomenal return. You got attracted, you invested, and then you see that they have become shaky. You saw the big decline, 5% decline in a month on the Sensex, or 3% decline in the Sensex, but the mid cap fell so much more. Or the small caps actually crumbled maybe 3 months back, or the market is rising but a certain segment of the market was falling, and so you find I think if you have a long-term view, I don't know about the lump sum, because it is entirely a function of when you invested that big amount and how long will it take for you to break even. But I think you only have I always suggest in terms of controlling the controllables, not in terms of, because many things you don't have a control on. You continue your SIP because you'll be able to average. Make sure that you are in a high quality mid cap or a small cap fund, because high quality meaning look at the company, look at the investment philosophy, is the fund manager, because don't just get carried by the past performance, because the small cap and the mid cap can also be a trap. They are the funds which actually take the biggest risk. They might turn out to be most rewarding at a certain point, and they might prove to be the disastrous ones too. So being little conservative with your opinion, understanding with your selection, understanding what the fund manager is trying to do. The fund manager must have a fundamentally guided quality focus, otherwise you will be in for disappointment. Lot of the range of return that is available in small caps and the mid caps is wide. When you look at the large cap fund, you find that there are funds which are the return the best fund and the worst fund could range between 12 to 15%. When you look at the small cap fund, you find that it is -10 over the past 1 year, and it is +30. This is a wide range, and the fund manager's ability to add substantial value with his selectivity, with his foresight, with his brilliance is high. So it's important that you choose a fund manager who has been through a full market cycle, who has a quality focus, because quality focus, I think, is the most crucial thing, and it's a hard thing for investors to decode.
You mentioned a lot of the word trap, that it's a trap. So what is safe then?
You derive safety by these 3-4 things. One is that your ability to average, the convenience of being able to average. The other is diversification. I would say that if somebody is investing in mutual fund for the first time and is concerned about safety, then he should not start with a small cap and a mid cap in the first place. He should start with those equity income funds, those 33% into equity, or the balanced fund, or the tax saving fund, the conservative ones, so that you get stuck for 3 years and you are forced to experience the joys of equity or the rewards of equity.
Correct.
So that should be the starting point. Don't get venturesome at the outset.